Hello dear traders, my name is Alina, I am financial advisor in AMarkets company. Today I would like to tell you about trading ideas of the current week. There were many economics events started up the market and created the new trends in the last week. The British pound was falling against most of the major currencies, while the United Kingdom government didn't have progress in the Brexit deal. One of the main questions about borders in Northern Ireland wasn't solved. US markets have had the second wave of the uptrend. Most of the indices went in the green zone for the current year. However, the risks of the United States and Chinese trade war disappointment in the corporate profit and other problems haunt investors. The representative of Saudi Arabia in OPEC reported about the possibility of new measures to adjust exit oil stocks in the near future. The Minister of Energy and Natural Resources voiced the same position. In addition, there were central banks' rate decisions on the last week. Reserve Bank of Australia kept rate at 1.5%, RB of New Zealand kept it at 1.75%, and US Fed announced 2.25% interest rates. The US dollar showed mixed dynamic against major last week, while Democrats won United States House of Representatives elections. However, strong US fundamental data like producer price index and market PMI helped the dollar increasing by the end of the week. A few words about euro indices. Germany's DAX has finished last week close to opening at 11,532, while European shares were falling as investors kept moving away from risky assets. The reason for that is some number of political situations, including Italy and Brexit. Also, the United States stock market effect on this. Regarding to Italy, the European Commission had rejected the 2019 budget plan because they cannot see any reason to review a revised budget. From the technical point of view, RSI indicator keeps staying in the neutral zone, but on a counted downtrend, bears can reach the 76.8% FIBA level. From the other view, the MACD indicator is moving below zero. SMI line is lower, that gives us a bullish signal. And about gold, the spot metal fell again below $1,230 after a great run for the previous 2 weeks. Breaking the $1,220 resistance on this way, most analysis suppose that gold will be most popular safe haven for the investors while there is a turbulent situation on the currency markets. Technically, the gold is overbought now. Regarding Kahneman data, it shows 75% of buyers, and it is a bearish signal for the instrument on the daily chart. We expect falling to previous support $1,190. So, about upcoming week, there will not be a lot of important news in the current week, but most of them will be significant. We are sure that this event will affect the course of traders for the coming week. The first of them will be average earnings in the United Kingdom on Tuesday and consumer price index on Wednesday. If the United Kingdom data grows faster than expectations, the pound buyers will have a strong hand against the sellers. However, we expect that British pound dollar currency pair will trade in 1.2750 and 1.2950 range. On Wednesday, November 14, we expect GDP publication in Eurozone and Germany and consumer price index in the United States. The important data comes on Thursday. Employment change, the unemployment rate in Australia, retail sales in US. So on Friday we expect consumer price index release in Eurozone and ECB President Draghi's speech. Of course, these fundamental releases may affect on the currency market. We are waiting for falling euro dollar and British pound dollar to new low of November, UCOL and DAX rising and gold price falling. So our targets for euro dollar is selling from 1.1370. UCoil is buying to $75, British pound dollar is selling to 1.2750, and gold is selling to $1,190 in a middle term period. German DAX is buying to 11,970. This is all for this week, and visit amarkets.com for more market analytics and trading news.